Hello, everybody. Welcome to the latest episode. This one is Life Insurance 101. It's the basics of what it is and how to get it. Kind of a beginner's guide to life insurance. If you want to see other videos, other articles, if you want to see something added to this resource, which will be on the website at protectwithinsurance.com. If you want to see anything added that we can help with, please email us at hello@protectwithinsurance.com and we'll get on that for you. Now, first of all, what is life insurance? Like I said, this is a beginner's guide, so let me start at the beginning and kind of just move forward a little bit. I'll try and cover a lot of material in just the next few minutes. Life insurance, as most of you are already going to know, is a type of insurance that you get that upon your death, it is going to send one check to your loved ones. You identify what's called a beneficiary. Let's say it is your daughter or your son or your spouse. Or even you can use a trust or an estate, a sibling. You identify them as your beneficiary within the policy, and upon your death, they're going to receive X dollars, let's say $5,000 or $20,000 or $40,000, depending upon the type of life insurance, maybe even $100,000 or $300,000. But typically, past the age of about 50, 55, you start to see whole life insurance. And those policy amounts tend to be $5,000 to $40,000. So upon your death, they receive that much money, and they can use that money for anything. There are no tax consequences of them receiving that money, and it tends to come right away after your death. So it can take care of things like your burial costs. It can take care of other final expenses. Typically, these kind of things are going to be a financial gift and or burial, cremation, funeral costs, travel expenses, pay off miscellaneous bills upon your death, that kind of thing. It tends to be the most economical way to take care of those costs. And so these policies are set up with the intention of being hopefully affordable for people that are on a fixed income, because most seniors are on a fixed income. And again, burial insurance, which is a common term for whole life insurance for seniors, they are usually going to be with a fixed income, and so it has to be affordable for them. Now, how does this kind of thing work? How does life insurance work? You reach out, you get in touch with a life insurance agency, just like that's what we do. We're Protect with Insurance. We're a life insurance agency. We're headquartered out of Arizona, but we serve most of the United States. And so we're able to pull competitive pricing by shopping a whole bunch of these A-rated life insurance companies. And then depending upon your health, whichever company offers the lowest price, that's what we talk about. And then from that point, you just tell us what you would like to do, and we support you. So that's it. That part is really simple. So you select an agency. The agency goes to the life insurance company. If there's a certain company that you want to work with, tell your agent that, and they can just do that. Now, you don't have to pay any more for your policy. It's not like grabbing a real estate agent. Your real estate agent gets a commission, and it costs the seller money to do that. 99 out of 100 times, buyer doesn't have to pay that commission directly to a real estate agent. But anyway, it's different with life insurance agencies. It's paid directly from the life insurance company. It doesn't cost you any more to utilize a life insurance agency. And most life insurance companies, they require that you have a life insurance agent. They won't service it directly. So if you were to call up, let's say, Mutual of Omaha, they're a great life insurance company. If you call them directly and say, hey, we want life insurance, they're going to say, okay, well, you have to have an agent. We can assign an agent for you, is what they would say. And then they would assign you someone that is likely not going to be great. It's not going to be someone in-house for them. It's just going to be an agent that's in their network. Just like technically we're in their network as well. But the thing is, unlike most of the other agents, we're going to have access to a whole bunch of other companies as well, because we're going to shop for your benefit. We're going to shop everybody. So you go to the agent or agency. They connect you with the life insurance company, and you get your coverage. And then you have 2 points of contact. If you ever need anything, you can call the agent that works with you directly, or you can just reach out to the life insurance company. So that's generally how that works. Now, I mentioned earlier, there are different kinds of life insurance. So there's whole life insurance, which for seniors tends to be the best option because whole life insurance lasts forever, so it doesn't expire. The price will never increase. The coverage, meaning the amount that your loved ones will receive upon your death, the death benefit, is never going to change. And it builds up a cash value slowly over time. And so it's a great, great policy. It's also pretty flexible in terms of your health and getting qualified, getting approved for that policy. So that's whole life. Now, whole life has a lot of names, and it's all the same thing. So the following names are all whole life insurance. Burial insurance for seniors, funeral expense policy, funeral policy, and jumbo whole life. I mean, that's slightly different, but universal whole life is a different kind of whole life insurance. But all of these variations of whole life, most of them are exactly the same thing, and calling them different things is purely marketing and salesmanship. So just be aware of that. Also, different types of life insurance, term life insurance. Those tend to be larger coverage policies, meaning larger death benefit, larger check that goes to your loved ones, but they do expire. The prices do increase over time once you hit the end of the term, because remember, it's term life insurance, which means a length of time, anywhere from 1 year to 30 years, depending upon age and health. Term life insurance is a lot harder to get approved for. If you have any health issues, you're likely going to get declined with that kind of coverage. Accidental only is a type of life insurance. It's only going to pay your loved ones if you die due to an accident, something within the accidental death category. It's roughly a third of deaths are accidental deaths. So it's a bit of a gamble with that policy, whereas whole life and term life are full coverage policies, everything but intentionally self-inflicted. They'll take care of you. There are a few other variations of life insurance too, but I'm not going to get into them right now. The last thing is there's a direct correlation between your current age when you get the life insurance policy, as well as your health and what your price is going to be. So the higher the age, the more expensive your policy is. Now, bear in mind, with whole life insurance, your price will lock. So once you get your policy, you're never going to see that price increase. But the longer you wait to get your life insurance, the more expensive it is when you finally lock it down. So just be aware of that. The sooner you get it, the better. Now, as far as health, don't be nervous about your health. If you think you have a lot of health issues, talk with, it doesn't have to be us, but reach out to an agency that has access to a lot of A-rated companies, because they should. I mean, 99% of the time we're able to get people approved, and most of those are going to be preferred health ratings, which is extremely high health ratings, which brings your price down. So it's a lot more affordable. So for example, most of our clients, they have their policy that's set up with another agency, another life insurance company, and they give us a call because they want to price it out, just see if they can do better. And we're able to bring either one of two options, either bring their price down, usually about 20%, or keep their price the same, but increase their coverage so that their loved ones get more. So instead of their loved ones getting $5,000, sometimes they're able to get $10,000 or even $15,000 at the same price. Significant improvement. So there is a correlation. Just bear in mind that, as you get older, get into your 70s or even 80s, it's going to cost a lot more for you to get $20,000 or $30,000 or $40,000. So a lot of seniors that are in their 80s, they usually go with more of a $5,000 or $10,000 policy because it does get so expensive. But if you call us when you're still in your 60s or your 50s or early 70s, you may find that it's surprisingly affordable, and you can get $30,000 or $40,000 in coverage if you want it. And you may not need that. Most people, they get about a $10,000 or $20,000 or $30,000 policy. But typically you can go from 5 to 40 depending upon your health. So I hope this has been helpful. Please check out our other resources on our website, protectwithinsurance.com. We have actual pricing on there. We also have a free quoting widget software that you can use to pull your own prices, or you can just reach out to us at 928-323-0933, and one of our agents can help you out personally. All right, take care.